Imagine a Harvard professor, not a Wall Street trader, outperforming the titans of finance. Warren Buffett, Ray Dalio, Peter Lynch, for 36 straight years. Yes, you heard that right. For over 3 decades, Jim Simons did not just beat the market, he destroyed it. How? Using mathematical models and algorithms. And before you can think, oh, another Wall Street genius, let me stop you right there. Jim Simons wasn't your average finance guy. He was a mathematician, a codebreaker, and quite literally a man who cracked Wall Street. But what were his secrets? What did he do differently? And why is his story one of the most intriguing in the history of finance? Let's dive in. But before that, look at this tweet by a finance expert. He explained about the secrets Jim Simon used in trading. But for those not familiar with the finance market, let's have a deep dive. Let's go back to the 1960s. Jim Simons was not looking at stock charts or digging through financial statements. No, he was working on something far more complex: geometry. As a young mathematician, Simons solved problems most of us can't even understand.
On a number of occasions, and I thought, boy, that's the greatest job in the world, when you can just hang out at a delicatessen and do mathematics.
Indeed, the brilliant work he accomplished in geometry and topology made him one of the brightest minds in his time. By the early 1970s, Simons was a leader in code breaking for the National Security Agency, NSA. His task? Deciphering patterns when others saw only chaos. Ring a bell?
That's the National Security Agency. It didn't exactly come calling. They had an operation at Princeton where they hired mathematicians to attack secret codes and stuff like that. And I knew that existed.
But here's the thing. Simons hated bureaucracy. He left his government job to pursue a career in academia. He became a professor, a mentor, and even a dean. At this point, you might be thinking, so how does a math expert go from teaching classes to building a financial empire? Well, hold on to your seat, because I want to tell you about the discovery moment. It was 1978. Simons was in his 40s. He wanted to trade currencies. His method? Use mathematical formulas to predict price movements. It wasn't easy and he lost early on. But unlike most traders, Simons didn't rely on instincts or market rumors. He relied on data. This is where the story takes a turn. Simons assembled a team of mathematicians, physicists, and computer scientists, not stock traders. Together, they developed algorithms that could identify hidden patterns in the market. Their secret sauce? Something called quantitative analysis. If you think this was revolutionary, you're absolutely right. Simons essentially turned trading into a science experiment. And while Wall Street laughed, he kept refining his models. By the year 1982, Jim Simons formed Renaissance Technologies, which went on to become one of the world's most successful hedge funds. But here's a catch. He wasn't pocketing billions right then and there. In truth, Renaissance was a struggling venture during its early years. The methods that Simons and his team developed faced criticism from the traditional financiers, who referred to their techniques as too academic. However, Simons believed in his vision. Gradually but steadily, Renaissance Technologies began cracking the code of Wall Street. Some experts gave very strong views on the technology, simply calling it the single most successful hedge fund. The Medallion Fund was unlike any other in the world. As other funds would celebrate with a return of 10%, Medallion produced average annual returns over 66%. Yes, 66%, even after fees. But how did they do this? The answer lies next. Okay, let's get to the good stuff. Here are Jim Simons' secrets to trading. The Medallion Fund operated in a way that was completely unique. Data over instinct. First, Renaissance gathered lots of data. Simons felt that the market could not be really random. It just looked that way. Using decades worth of information, his team found order that no one could see with a naked eye. Mathematical models. Once the data was gathered, it was fed into intricate mathematical models. These models were able to forecast short-term price movements precisely and as accurately as it can be. Algorithmic trading. While traditional traders depended on gut feelings, Renaissance depended on algorithms. The latter executed trades faster than a human, so that the fund always operated under an edge. Continuous evolution. The Renaissance never relaxed. Simons knew that the markets change. Therefore, his team always upgraded its models to ensure the best fit according to new conditions. Secrecy. Simons' model operated secretly, and others outside the doors were not able to hear anything. They were not aware of the models, algorithms, or internal processes that Simons' Renaissance technology used. Avoid long-term prediction. Not only that, he also avoided making predictions in the long run just like other traders do. His models focused on short-term price movements, holding stocks for seconds rather than months. If this sounds like some kind of cheat code for making money, well, it kinda is. By the 1990s, Jim Simons was a Wall Street legend. The Medallion Fund was so successful that Renaissance stopped taking outside money. Why share the profits when you can keep them in-house, right? But that's where it ends. Simons did not just make money but invested his money into scientific research, education, and philanthropic causes. Through his Simons Foundation, he has donated billions of dollars to initiatives, cementing his legacy not only as a financial genius, but also a humanitarian. So, what can we learn from Jim Simons? Is it possible for an average person to replicate his success? Probably not. But that doesn't mean there aren't valuable lessons here. Think differently. He wasn't a follower. He approached the trading game with a completely fresh perspective, one that proved innovation works. Invest in knowledge. Surround yourself with brains and never stop learning. This is how he succeeded, from a foundation of intellectual curiosity. Be patient. For Simons, overnight success was not part of the program. He did face setbacks and skepticism, but he stayed the course. Use technology. In today's world, data and algorithms are more accessible than ever. You might not build the next Renaissance technologies, but you can still use technology to gain an edge. Jim Simons is a genius. He was once a mathematician, then became a codebreaker, and then turned out to be the greatest hedge fund manager in history. His story tells the power of innovation, perseverance, and above all, out-of-the-box thinking. And when someone says that the stock market is unpredictable, just remind yourself of Jim Simons. It didn't simply predict the market, it learned how to master the market. What do you think about Simons' strategies? Genius or just lucky? Let us know in the comments below. And don't forget to like, subscribe, and hit the bell icon for more fascinating stories like this one.